Let's talk about Roblox. And my intro question on this is we, of course, know you're an absolute expert in all things tech, but how on top of Roblox as a company and what it does were you in months leading up to this IPO?
Not that much. And then I asked my son this morning, who's 12, because I knew I was coming on today, and I said, hey, what do you think of Roblox? He said, that's for third graders, very, very dismissively. So it neither as a parent nor as an investor has it really kind of hit me where I am. But where I think it is pretty interesting and relevant to the work that I do is when you look at the intersection of technology and regulation, you have this company that is both something I think is pretty extraordinary, and you could see why investors are really excited about it. However, the one red flag to raise here is if you look at the regulations coming down the pike, whether it's the potential repeal of Section 230 of the Communications Decency Act, some type of enaction of national privacy legislation, other states adopting their own versions of privacy legislation, anything that deals with kids is going to be impacted and touched in some way. And so the current business model that Roblox relies on, everything but the in-app purchases theoretically could be changed by regulation. So as people are deciding whether or not to buy or sell the stock, they should keep that in mind.
We've talked this week with various people about the attractions of it, and the level of engagement it gets is one standout item. Does that, regulation aside, suggest that there are many more monetization levers that might be able to be pulled going forward?
Yeah, potentially. Look, clearly for the creator economy, it's a tremendous boon, and it's nice to see a way for talented, smart people to be able to make money using their talent. So that's great. And anyone who can think of other ways to integrate it through in-app purchases, I think, has a tremendous opportunity to do even better. And also, look, the Roblox has done really well with kids, but it's not like it's exclusively the only platform. And so other platforms can come along and use a similar model and also do well. So you only get into trouble when you're really relying on revenue from third parties aimed at kids.
There's also this idea of the metaverse and what it could mean for big brands, something that was mentioned on IPO day. Nike is a really good example. I went back and looked. They did this Nike Air Max activation day on Roblox. You could think of other fashion labels doing, wardrobes, design your own wardrobes in this world. What are the possibilities here, and what should brands be thinking about?
I mean, look, currency to me is a really good one, right? So ultimately, if you had Nike bucks or Tesla bucks or whatever it is, and there was some slight economic incentive to be able to use those, then you may be able to get people to trade real money for your kind of skin-like money. And then from there, they're pretty much limited to buying just your product. So if you create these virtual worlds and can really penetrate them well, you not only can reach a lot of people, but you could probably sell a lot of product within those worlds itself. And I think that could apply to almost any consumer brand or good. So it's really just a question of how creative you are.
But, Brad, do you think these types of things justify the levels we've seen in the NASDAQ and other tech stocks, because it just, again, highlights all these new avenues that we haven't even potentially touched on yet?
Yeah, look, it's still a very optimistic take. $40 billion is a very high valuation for any company. So is it really a $40 billion company? I don't know. But is it a company, at least, that is doing something different and new that has potential revenue streams that can be very significant and interesting? Yeah, absolutely. So it makes more sense than what we saw with GameStop or whatever else. But at the same time, is it going to stay at 40 billion? I'd be surprised.
Bradley Tusk, thanks for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.